Thank you for joining. We will start the session in less than 2 minutes. Hello, everyone, and welcome to another session of Let's Get Technical. I'm Kavita Agrawal, the founder of EXP-Invest, a company dedicated to the success of retail traders. In today's session, I have a very special topic for you. Today, we are talking about how to react when a stock that you exited started rallying. This can happen in many different circumstances, and of course, you need to react differently according to the difference in circumstances. I have 3 case studies for you specifically, and I'm going to tell you more about it shortly. So, all right, so you can see my screen, right? The 3 case studies which I will share with you. First will be Bsoft, where we spotted an opportunity and almost missed it. Almost because it was missed out from the active recommendations, but it was captured in the portfolios which I manage myself. Second is JK paper, where the rally was missed due to premature exit, but because of the first study done on Bsoft, I was able to recover that opportunity and by recommending a re-entry in JK paper. And the last is BPCL, where we almost missed the opportunity very recently, and I have issued a re-entry for the members just today. So in all the 3 cases, you can see the circumstances is the same, but the level of opportunity that was recovered versus the opportunity that was missed is of course different. So I will take you step by step what I learned, how I learned it, and how you can also apply it in your trading so that this does not happen with you. All right. So I'm going to share my screen, my chart with you, and as promised, we'll start with the chart of Bsoft. Now on this chart of Bsoft, I want to first show you where I had spotted the opportunity. Okay, all right. So back in February of 23, I had noticed that Bsoft had declined quite a bit. Okay, it fell nearly 54% from the top, And on the basis of my trend line, I could see that there was a very strong trend line support, right? And on the basis of this trend line support, I gave a stock idea to the members exactly when the stock came down to touch this trend line. Now remember that I did not just wake up on the morning of 3rd February 23 and give the call in BSOF. I had been observing this stock from October for a potential opportunity to give stock idea in. I had spotted that the stock, since I started following it, had given a 24% rally. And even though the stock did not go above the previous set high here, it took resistance. The momentum with which this stock had rallied this 24% was quite strong, which was an indication for me that the next time the stock gives a rally, it is going to be a stronger rally, okay, more sustained one. So when the stock basically came down to retest the same low, few things stood out. Firstly, that the RSI was now in operating in the bullish range. Then there was a trend line support, and then the volume activity on the upside, as you can see, was very strong and positive. Okay, so having made all these observations, we went forward and created our position. Now what happens is, when a stock gives such a sharp decline and starts to rally, even if our analysis is on spot, some biases creep in, and that is what happened in this case. The stock started moving pretty soon, right? However, we started maintaining a stop loss that was quite tight, and because of that, the stock got exited, right? So for my active members, the position was exited then and there. However, the stock did come down and trigger an alert for me at the level of 30 on 75-minute time frames RSI. That is where I initiated the position again in my in the portfolios that I manage. After that, the stock rallied very strongly. The problem is that because the stock rallied quite strongly here, I no longer had the confidence to give the stock idea to my members. My learning from this is that when the stock forged the first high, right? I'm going to pause this. So when the stock forged the first high right here, this is essentially where the stock idea should have been re-entered and a new buy entry should have been given to the members, right? If that would have done, then what would have been the returns? Let's take a look. So starting here, we can see that the stock started to rally. It gave 29% in about 38 days. And then it continued to rally, giving around 67%. Now this is where my target on the stock got achieved. Okay. So you can see this green line here. This indicates the target in the stock of BSoft. Okay, so based on technical analysis, you can see my momentum strategy allowed me to get almost a perfect reply in the stock, and on the basis of that, the entry on the stock was quite good. But entering a stock at the right time is not enough. You need to be able to manage your positions well. You need to be able to make sure that you exit properly. Okay, so we learned a few things here. Number one, the entry strategy was on spot, but the exit strategy had space for improvement. Okay, so we took this learning. So basically we had this learning drawn out already in May, right? Like by June we had this knowledge. So how did we apply this knowledge? Let's move on to the second case study on JK paper. So JK paper basically started rallying somewhere around 7th of July. Okay, and as you can see that the stock had declined nearly 30% from its previous peak. Because of lots of reasons, we took the call that JK paper looks quite attractive. Some of those were, there was the 500 EMA on the daily time frame. So this is the daily time frame, right? So there is the 500 EMA support here. You might not be able to see the line because it's a very, very dark gray color. It's because I don't want that line to stand out in my analysis. So this 500 EMA gave support to the price, and if you look at the RSI had made a positive range shift and shown a positive divergence. There were some more studies like volumes and price patterns and some Fibonacci retracements, but that is not the objective of this case study. The objective is this, that we initially, so once we had entered the stock idea here, right, what had happened again was that the bias of, or rather the fear of missing some profit when the stock moved up and took resistance at the 200 EMA on the 75-minute time frame, the fear that unrealized profit may be lost made me revise my stop loss tight. So I moved the stop loss somewhere here. Okay, so the price basically moved from 312 all the way to the level of around 327. That is around 4.7% profit in 9 days. Not bad, right? Now, in order to secure this 4% profit, I naturally moved the stop loss up to 319. And as you can see, the stop loss got triggered over here, correct? Now what I had done was I had I remembered the analysis that I had done on Vsoft where I missed the profits, like I missed opportunity in a similar situation. So what I did was I simply took a step back and I determined that the stock is still bottoming out. The stock is still coming out, and usually when a stock is coming out of a big decline, it has a tendency to give a bigger correction. So like for instance, if you see this correction, it's a bigger percentage of the previous rally, this one. If you see this correction, it's a relatively smaller percentage of retracement of the previous upside. If you see this one, it becomes even smaller. So this is how stocks basically progress. All right, so the lesson was that don't keep such a tight stop loss, or even if the stop loss has been triggered, let's take a step back and revisit whether the stop loss was a justified one. I realized it was not. The stop loss should not have been higher than basically this level. So this is a very good support level that the price would have come to retest. So what I did was I reset the stop loss basically at the cost level, so that even if the price continues the bear trend, the stock or the capital does not experience any loss. Worst case, we get out cost to cost. The ideology behind doing this is to always minimize our risk. Okay, so profit preservation is one objective, but we need to give the stock enough breathing space, and we need to make sure that our capital is not unnecessarily getting risk. At this point of time, even revising the stop loss back to the original level would not have been a bad idea. And as you can see, so this is still part of our active positions, and the stock has rallied from that low all the way to 380, which is 22% profits in less than 2 months. Right, and this is part of the stock recommendation or the trade together program which I give out from retail traders. Now let's move on to the third case study, BPCL. So in this, what did we learn? We learned that okay, the entry analysis was again good, that has been established, but when we were revising our stop loss, a little bit tighter than intended stop loss had been set. But what happens in a situation where you set the stop loss as per analysis without any biases kicking in, and still your stop loss gets triggered? What happens if you see your stock reapproaching your exit price? What should you do then? So for that, I have the case study on BPCL for you. So let me add some context on BPCL for you. So BPCL was given to my members twice. The first time I gave it was on 18th of April, and as you can see here, on the 18th of April, the stock rallied like unidirectionally and gave us around 8% returns in a matter of 19 days. Okay, after that the stock went into some correction, but the rest of the upside was missed because I was basically not paying attention, and there was also negative divergence which did not, in my eyes, make BPCL the best re-entry candidate. There were better opportunities available at that point of time, so we let go of the rest of the upside that unfolded. However, recently a trigger was alerted to me that BPCL has approached the 200 EMA support on the daily time frame. Okay, so that is when I restudied the chart, and as you can see, I have marked this bullish breakout. So this is a very important resistance this was a very important resistance zone, and once the price broke up above it, it became a very important support zone. So now we could see that there was a strong trendline support, there was a strong 200 EMA support, and at the same time there was this very important support zone passing through. So three evidences, right? Moreover, if you look at the volume, in the volume profile also there was there is an indication that the volume has been decreasing when the price is declining, and the volume has been higher when the price has been going higher, which is an indication of trend reversal for us and reversal to the bullish side. But what happened here was, few days ago, so my expectation originally was that the stock is going to go up all the way from here. Okay, so as a result of that, I set the stop loss at this red line. Okay, so this is where I had set the stop loss, around at 350 rupees. As you can see, the price indeed came below that, and it took support at the next present trend line here. So why did that happen? In my opinion, the trend line that is passing through this zone, basically this trend line, is also an important trend line. As you can see, BPCL also has been coming out of a massive correction, and when a stock is coming out, so this is the weekly time frame. Okay, so this is where the bear move on BPCL had ended, and this is the point where, after forming a very textbook definition doji, this candle right here, the price started to move up. Now, when the price started to move up from here, one thing that we can clearly see is that the price has constantly been revisiting this channel. Okay, and remember, we are doing swing trading here, yet we need to keep an eye on the weekly time frame, because a channel on the weekly time frame is exerting pressure on the prices right now. Okay, so my expectation was that the price is not going to revisit the channel, but I was proven wrong. Okay, so when did I decide that it's a good time to re-enter the stock idea? Going back on the 75-minute time frame, today when I noticed that the price had visited in the past. Okay, let me just adjust this. Okay, so when I saw today that the price basically revisited this trend line and formed these indecision candles, or the doji candles, right, and gave a massive gap up today morning, this is when I decided that it's time to re-enter the idea. Now, if you all know candlesticks, then you might be able to tell me the name of this pattern, and anyone who gives me the correct name of this pattern in the comment section will receive a special prize at the end of the session. Okay, all right, so now moving on, so this is when we basically decided, and also you can see that the volume is pretty strong, indicating that the price has a good chance of moving up. Now, this by itself is also not significant, not sufficient. We need to take into consideration the broader market momentum. So if you saw Nifty today, even though Nifty gave a slightly negative closing to the day, for me the day has been fantastic. Okay, why am I saying that? Because yesterday Nifty took resistance at my shared level, which was 19,470, right? The next level that was presented as resistance was around 19,600. Today what we saw was that Nifty opened above this yesterday's resistance level, reached today's resistance level, and went all the way back to the existing support of 19,380. So the existing support is actually 19,350, but what I think is that because there is this 200 EMA on the 75-minute time frame, this is basically what is getting retested, and my expectation is that the upside momentum in the market is intact, because resistances have been breached 2 days back to back. Now, keeping that in mind, going back to BPCL, so understanding that the underlying momentum has been strong. If you look at the stock movement, like for me, all the active stock ideas which have been shared with members, each one of them has closed in green today. Okay, so even if the broad market index, which is Nifty, has given slightly negative move during the day, it's quite normal. The underlying momentum is clearly become positive in the market. There's a lot of study behind that, but I'm giving you a summary. Okay, so all in all, because of these reasons, because of the learning that we first got from Birla Soft, what we applied in JK paper and see it work, there is also reason why we believe that the study in BPCL is also going to give us similar returns. Okay, so that's all the case study that I had for you. Now, I have been mentioning the Trade Together program repeatedly. So if you are interested in the Trade Together program, I am pasting the link of my of a form that you need to fill out, and you will be called back. And for those who have given the correct answer in the chat, will also receive a email from me with a special code bearing a 20% discount as reward for the right answer. And I can see some people have given. So Saur is saying, is it a bullish engulfing candle? No, it is not a bullish engulfing candle. But is there anyone who has given the right answer so far? Okay, not yet, but if anybody still knows the correct answer, feel free to do that. So the link of the form will be shared in the chat. You can fill that up. On a different note, if you want to connect with me and if you want to know more about how I interact with members and the broad market updates which I share on my Telegram channel, you're most welcome to join it using the Telegram channel link which I'm pasting in the comments, right? You can do that. Now, in order to teach technicals the way I do technicals, every Monday I conduct a session called the Retail Traders Special. Now, in that, I have been doing a 10-part series covering one topic each day with practical application more than theoretical parts. If you're interested in knowing more or rewatching those videos, you can go on my YouTube channel and rewatch those videos from there. So I think that's pretty much it. Now, of course, before I go, let me quickly take some time to look at your comments and help you out with your questions. All right, so I'm gonna go back to my charts and I can see there is a question from Vishal Shah. He's asking about LTTS. Larsen and Toubro Technologies. Okay. All right. We do have correct answer from Mr. Sujit Verma. So Sujit ji, if you can just join the Telegram channel and drop me a message, I'll be more than happy to send you the form link so that you can fill it up. All right. Let's see. LTTS. I hope you can see my screen. I see a big negative divergence here, and I see that RSI is not enjoying or not able to go above the level of 70 on the 70 above the level of 60 on 75-minute time frame. The daily time frame is looking a little heated up. The 15-minute is also not looking positive. So Vishal ji, if you're holding LTTS, I would suggest you use the stop loss at the level of 4230. So maintain a stop loss at 4230. And if it is triggered, then you should exit your position. But at this point of time, fresh entry is not recommended in LTTS. Now, Suzlon Energy. Very good rally has unfolded here undoubtedly, but should you make a fresh position at this point of time? In my opinion, no, because our motto is very simple in the stock market. We want to enter stocks before the rally, not after the rally. See, when you enter a stock after the rally, you might be thinking that even if I can make 5-10% profit, I'll be very happy. What happens is that your retail trader mindset is kicking in, and you are exposing your capital to a lot of risk. While it may be true that there might be 5 to 10% upside, there is a bigger chance that there will be a 20% downside to that stock. Okay, so what I'm seeing on retail on Suzlon is that, see, today the stock opened with a gap up and it closed down, even though the stock has been triggering upper circuit since the past few days. The kind of movement that it has given today, there is a good chance that the stock can stop the rally which has been unfolding. So just for the sake of making 5-10%, don't expose your capital to a big risk. Now, if you look at the broader trend in Suzlon, the stock has a tendency of giving massive 50-50%, 40-50% declines if you are stuck at the top. And if you look at the price right now, it's been a while since the stock experienced any kind of mean reversion. So if anything, it is closer to a decline than to a upside. Not a good idea to enter at this point of time. Mahesh ji has a question. Godrej property. He entered at 1540. Godrej property. 1540. So the position has been performing for you, and not very long ago you've entered, but I see that your entry has been pretty well timed, because I can see that the 75, the 15-minute, the volume profile, the daily time frame were all signaling that it's a good idea to enter the stock. So your entry has been pretty good, Mahesh ji. I would suggest that you definitely hold on to the stock. And for what target should you hold on? So I'm seeing that the stock uses trend lines, or rather it respects the trend lines quite well. So for me, I would suggest the first target for you to be around 1840, right? So for a target of 1840, you should definitely hold on to the position, but naturally you have to maintain a stop loss. So looking at the stock, I think a valid stop loss for you would be around 3%, that is 1560. So for a 3% stop loss, a target of around 14-15% is not bad, right? So 1830 is your target, and your stop loss, as I said, is 1560. So you should definitely continue to hold on to the position. So Rajesh Kumarji's responded to the quiz that I asked. Now, if someone's joined late and wondering what is the quiz for which I am giving out rewards, basically I've asked you to identify this pattern for me, this entire pattern. So Rajesh ji, unfortunately there is no Marubozu in the entire 5 candle pattern that I'm asking. So this is a candlestick pattern, and it's actually a very popular candlestick pattern. So anybody who can give me the right name of this tiny little pattern, so far only one person has given it. People who can give the right name will get a reward via email. So for that, I will also require you to either drop your email or fill up the form that I have shared, and I will reach out to you with your reward. Okay, so Mr. Kumar is saying he thinks that it has given a breakout on the weekly TF. So see, the problem with trading a breakout on the weekly time frame is that by the time this breakout has come, most of your price movement is already gone. Okay, so I know breakout trading is a very popular strategy, but you also have to remember it's a very obvious strategy. Okay, and there is a tendency of mean reversion in stocks. Usually when a breakout happens, the stock is very far away from its moving averages. So if you're going to start buying at the breakout, it's a bad idea. So what you should do is, when a breakout happens, and also I wouldn't really call it a breakout yet, because firstly the week is not over. Secondly, if you look at the volumes, it's not impressive. So a breakout is not a valid breakout if it is not accompanied by high volumes. I don't see any high volume, so I will not give it credit as a good breakout. Okay, so what you can do if you think it is a breakout is, firstly start monitoring it, and when it comes to a good support level, when it takes a little bit of a dip, when the RSI on some time frames come down, then you can consider taking a position. I will repeat one thing that I have said in all my sessions, that never ever commit your capital to a trade based on just one observation. Okay, You need to have a cluster of evidences. Look at volume, look at RSI, look at EMAs, look at breakouts, look at chart patterns, look at trend lines, look at everything that you can look at, and make sure you have a strong enough cluster of evidences which compels you to make a long position. Without that, don't commit your capital to unnecessary risk. Okay, the setup should be so strong that you should feel compelled to commit your capital. This is the same principle with which I operate, and this is the same principle with which I give stock recommendations to my members in this Trade Together program. See, as a retail trader, you obviously don't have the time to do the level of analysis that I am doing, because I am SEBI registered, I am a CMT and a CFA, and I have been doing this for the last 10 years. Not just that, I have access to resources, to systems, to tools and techniques which, if you start to build today, you will also take at least 5 years to build, right? So instead of trying to spread yourself too thin, it's better to take help from a registered analyst and use their trade setups to make your bets. If this is not enough, I also help you. So in the training program, there is a group call every week where I discuss with my members why a certain stock was picked, whatever updates were shared, why were they shared, so on and so forth. So there's a lot of value in this. Feel free to check it out in your own time. Now, moving on, let's take a look at some more comments. Okay, so we have Anuj Yadav ji, Deepak Nitrate, and looks like you posted your query right at the beginning. I wonder if you're even around, but still, since you posted your query, I will just take a look at Deepak Nitrate. Okay, so Deepak Nitrate. I think there are a lot better trades available right now. So since you've not indicated any buy price, I am taking the liberty to think that you want a fresh position in Deepak Nitrate. My recommendation is don't. HCC by SSJ Vlogs. Let's see. Short term HCC, fresh entry, absolutely not recommended. You should maintain a stop loss at the level of 24. Now, I don't prefer to trade a stock like HCC because it is too volatile. Usually, if you have to maintain a stop loss, it's going to be a very big stop loss. So, my core strategy compels me to always use a risk reward ratio of minimum 3, right? Even if the minimum risk reward ratio of 3 is met, if a stock is giving me a stop loss of more than 7-8%, then it falls outside my comfort zone and I will not go for it. Because even if the risk reward ratio is more than 3, I don't want to risk 10% of my capital at any point of time. So fresh positions, for fresh positions, HCC is not looking attractive. If you have an active position, you can maintain a stop loss of 24.2 and continue to hold. Actually, I would not recommend you to continue to hold also. I'm seeing some things which suggest that the stock is going to top out very soon. So I would recommend you to book your profits in HCC. We have a query on, what is this? I have never seen this stock before. It looks like Surma. Again, no fresh entry recommended in this either. Ketan is asking for query on South India Bank. Fresh entry not recommended. You've already unfortunately missed the rally and principle of mean reversion. So the stock is expected to take a dip. If you do want to enter, I would suggest look out for the level of 20 to 21. That is around like 10 to 14, 10 to 15% lower from the current market price. You can also set your bracket orders to make a position there, and you should wait for it. And if you have an active position right now, then I think you should maintain a stop loss uh, right below the level that I've recommended. So 20 rupees would be your stop loss. Now you can see that it is obviously a pretty big stop loss, but the reason why I would be okay with maintaining a big stop loss in this would be that the underlying momentum is very strong. It looks like it can continue. Okay, so if when the stock dips down to around 21, then I think if you can enter that time and maintain the stop loss I have mentioned, then it would be better execution than entering the stock right now. We have Rashmi ji, she's asking for view on Sipla. Okay, so I can see fantastic rally unfolded on Sipla and very, very good up move, right? So pharma sector is something that I've been bullish since February, and it was since March that they actually unfolded into a massive rally, and we've seen very good rallies unfold on Oro Pharma, Cipla, and many other stocks. But if you want to make a fresh entry in Cipla right now, I would not recommend you to do that, because see, the rally is already behind the stock. Okay, so you should wait for the stock to at least come back down and retest the 200 EMA on the 75-minute time frame. So anywhere between 1150 to 1140, you should try to make a fresh entry. But if you have an active position, then you need to maintain a trailing stop loss. And from what I can see, so the stock might take a little bit of a dip, so you should maintain your trailing stop loss below this 200 EMA. So around 1135 should be your trailing stop loss for the stock. On the upside, I think there is a very good opportunity for the stock to basically go all the way up and retest this key resistance trend line, which gives the stock a target of around 1545, right? And I would expect that target to be reached in about couple months. So that's for you, Rashmi ji. I hope you liked it. If you're still around, please like this live stream and drop a comment. It would make my day. So Ketan is asking for a short-term stock to buy. So Ketan, I don't give free recommendations as a SEBI registered analyst, because telling you the name of stock without helping you manage your position will be irresponsible. So if you're interested in short-term trading or swing trading with me, then I would suggest you consider participating in the Trade Together program. There is a query for NetWeb Technologies by Akhil. Or okay, I am going to pass on the analysis of this stock. It does not have enough technical data for me to study it. Next query is on DLF by Mr. Tulip. And DLF, again, same theme. I am actually quite bearish on DLF. In my opinion, as per my analysis, I think the upside has already been exhausted in the stock, and it has one way to go, that is down. So at this point of time, I wouldn't recommend you purchasing the stock. I wouldn't also put my own capital in the stock right now. So you've already bought DLF at 489. That means you bought it pretty recently. I'm guessing you bought the stock looking at the rally that has already happened. So I would suggest that you should book the small loss that you're experiencing right away, because see, the stock has already started forming lower lows and lower highs, and it has taken already given the bounce. So you're actually quite lucky that the stock is still at 480, 483. So if you can exit it tomorrow, that will be great for your capital. Sir, thank you so much for your kind words. Okay, so